What is going on, everybody? Welcome back to yet another brand new YouTube video. Now in today's YouTube video, we'll be going through the ICT silver bullet model. I'll be showing you guys the trade criteria and how to actually execute this trade, where to put your stop loss and where to take your profits, and so on and so forth. So without further ado, let's get right into the video. Now the first thing that I want to be looking for and seeing before even looking for a trade is a buy side or a sell side liquidity level getting swept. And the reason why I want to see one of these levels getting swept is because price simply moves from a sell side level to a buy side level, and from buy side to a sell side level. My apologies for interrupting the video here, guys. However, I am having one more spot for my one-on-one Crown Capital mentorship program that will be taken surely by the end of this month. So if you guys are willing to look for a mentor like myself, the link will be in the description down below. We'll work one-on-one to get you to the next level in your trading, whether that being getting your first funded account, getting first payout, or being consistent in the markets. So again, the link will be in the description down below. But for now, let's get right back into the video. As we can see right here, we do have Asia highs that was created in the Asia session, which is a valid buy-side liquidity level. And as soon as market opens at 9:30, we do go up and sweep that level. So as soon as I see that on the 15-minute time frame, I want to straight away jump down to the 1-minute time frame and look for my trade and entry point. So hopping down onto the 1-minute time frame, we could see that price did sweep that Asia high level at 10:22 a.m. obviously all in New York time. Now we didn't get any trades right here, obviously, because we're also not in the macro. The macro starts from 9:45 all the way to 10:15, and the second AM macro starts from 10:45 all the way to 11:15. Make sure to take your trades and execute only in these two 30-minute intervals, as these two 30-minute intervals have the highest return rate, and these are the time frames that pretty much have price moving and have price going to key levels. So now looking at our trade criteria, we do get this buy side liquidity level getting swept. Now a very important point, and before we even look for a trade, is that we must always have a buy side or a sell side liquidity level getting swept. Now if we do not get a level getting swept, then we do not have a trade. Number one has to be there. Number two on our trade criteria is going to be a swing low that is formed. Now we need to see a swing low because step number 3 and step number 4 are actually correlated and are related to that step number 2. Without step number 2, which is a swing low, we cannot move on to looking for a trade. Now if we look very closely, we do get this swing low that is created at 10:58, and we also do get the same swing low that is created at 10:58 on S&P 500. Now why am I looking at S&P when I'm only going to take the trade on NQ? Well, the reason being is because both assets must be correlating. And what I mean by correlating is that both assets are supposed to be showing me the same price action and the same price movement. This pretty much tells me that there should be no manipulation and that price is going to be willing to go to the downside. So coming back to the swing lows, as we said, we get one right here on NQ and one right here on S&P, both at the exact same time. Now they don't always have to be at the exact same time. This swing low could be at 10:59. This swing low could be at 10:58, but as long as we do get a swing low around that time on both assets, then I'm happy to look for a trade. Coming into step number 3 and step number 4 in our checklist criteria is a market structure shift and a displacement. Pretty much what a market structure shift is, as we can see, this candle right here, 11:07, opens and closes below this swing low right here that was formed at 10:58. That is just called a market structure shift. And a displacement is within that market structure shift. It's a big, strong push to the downside, telling me and indicating to me that price is willing to seek lower levels. Now, if we look to the right-hand side, as I just mentioned, we need to have correlating assets, meaning that both assets are supposed to be showing same or similar price action. And again, we do get this market structure shift with a displacement on S&P 500. This candle at 11:07 opens and closes below this swing low at 10:58, indicating to me again that price is willing to seek lower prices and that these two are not manipulating since they're doing the same thing. Coming into step number 5 on our checklist criteria is a fair value gap. As we can see, we do get this fair value gap that is formed at 11:05, and if you draw that out in time, we get a retracement into that fair value gap. Now this step number 5, we do not have to see on S&P 500 to get a valid trade. The only steps that we need to see on both assets are step number 2, 3, and 4, which is the swing low. We need to see that on NQ and S&P, the market structure shift, as well as the displacement. So these 3 steps in the middle are the steps that we need to see on both NQ and ES to have a valid and high probability of a trade. Now, the reason why a fair value gap is extremely important is because a retracement into a fair value gap is going to be our execution to go short. And a retracement, in other words, is price coming back and visiting that area, which is, we could see right here, it visits back at 1109. So as soon as price retraces onto the edge of that fair value gap, we are going to go short. I don't want to be waiting for price to go and tap into the middle or the top of the fair value gap, as most times or sometimes price won't come and tap into these levels, and you will eventually lose out on a plus setup. So always just place your limit order at the edge of the fair value gap so you are assured to get in the trade. Now, coming for our stop loss, where do we place it? We always want to place our stop loss above the nearest swing high to the left of us, which is in this case the 1104 candle. Now, regarding our take profit, we always want to aim for low hanging fruit, meaning that the first swing low to the left of us that will give us a 1 to 2 risk to reward to the left would be our ideal target. So as we can see right here, if we draw this out in time, we'll see that this swing low right here gives us a clean 1 to 2 risk to reward, and it is a low hanging fruit. And what I mean by low hanging fruit is you don't want to be targeting something like all the way down here, which is obviously a minus sell side liquidity level, but there is a lower chance for price to come and hit it, right? So you always want to be targeting the lowest hanging fruit, swing lows like that. You don't want to be targeting the major sell side liquidity levels, because sometimes, or actually most of the times, price won't reach those levels. These small wins do add up, guys. So make sure to aim for the lowest hanging fruit and bag the profits. Now let's talk about how you would actually handle risk in this scenario. Now, as soon as we see we get a swing low whilst we're in the trade and we break and close below this swing low right here with this 1116 candle, what do we do is we look to the right and see the next nearest swing high, which is this one right here at 1111. Then we take our stop loss and put it above this swing high. Now, if you watch very carefully, price does come back up, taps into this fair value gap once more, and then drops. Now, why wasn't I panicking right here? And the reason being is because I know that price, if it wants to keep on going downwards, it's going to be creating lower highs and lower lows. So the trend line will be going like that pretty much. It would not want to come up and take this swing high and then drop down, okay? So most times, trading is all about probability. So most times, if price wants to keep on going down, it will not go and take this swing high and drop. That's why we put our stop loss above the nearest swing high after taking a swing low. Same thing goes right here. We take this swing low, price breaks and closes below. What do we do? Next swing high to the right of us, we place our stop loss above this swing high right here. And you see, price does deliver over so perfectly. And there you guys have it, the ICT silver bullet model right in front of you guys. Now, if you guys do have any questions, let me know in the comments down below, and I'll be sure to get to them within the next 24 hours or less. Now, I do offer a VIP top trading floor Discord server where you guys could come in and literally take these trades that I take on a regular basis, bagging around 55 handles on the day. The link will be in the description down below for that. I also do offer heaps of more psychology tips, as well as that there's a VIP top traders floor chat where you guys could come in and literally chat with like-minded traders. My whole blueprint strategy is there. So if you guys are willing to join, the link will be in the description down below for that. Also, guys, make sure to subscribe. We are on our way to 1,000 subscribers. So if you guys do me a massive favor and hit that subscribe button. I love and appreciate each and every one of you guys. Until the next time, peace.